But shifting focus to the commodity markets then, Manisha Gupta, commodities editor, is here with us. Manisha, hi, good morning. Is the one commodity that you're tracking today crude once again?
Well, it is, and we have seen so much volatility into this market, and while we are off 13-month lows for the crude prices, but just about that, as you can see, it is a flat trade in the markets. But as I said, the volatility has been about 2 to 4% on a daily basis here. We did see prices slide below $50 per barrel on NYMEX yesterday, just about holding above that right now. So while the global markets have seen strength, it has been rupee calculations, and the Indian markets also adjusting to what the crude did in the New York session yesterday. Well, analysts for 2020 had estimated the global demand growth at around 1.2 million barrels per day, but with the coronavirus impact, there's an expectation that you could be looking at 0.3 to 0.4 million barrels per day being cut from that estimate there. Also, the Joint Technical Committee, Ministerial Committee, the second day of that meeting concludes today, and there are expectations that we could be hearing about announcements of an additional output cut coming in from the OPEC and allies. There already have been statements from Russia proposing 500,000 barrel output cut. There has been statements from Iraq to that effect as well. Saudi Arabia has been saying that we should be perhaps going for a quicker action and a steeper cut as well. There have been statements of 0.8 to 1 million barrels per day of a cut as well coming in from OPEC. That would definitely jolt or shock the market, and you would perhaps see some buying in the evening session as and when those statements come. But larger the additional output cut is a larger impact that you would see in the crude oil prices. In the meanwhile, we have seen various statements and actions come in from China. There is an expectation that you could be looking at a lower key lending rate from China on Feb 20th. That is when that announcement is coming. We already have seen $242 billion being pumped from China in last 2 or 3 sessions. So that is the reason you have seen the risk appetite come back into the markets as well. Further measures also are expected from China in the coming few sessions. We have seen better data come in from US in sense of ISM manufacturing data, and the US weekly numbers that are expected today in the evening also are expected to be bullish for the prices. So all of those factors working into the prices at this point in time. But not just crude, we also have seen some stability come back in case of metals. So buying strategy is there from IndiaNivesh. In case of nickel, 964 is the target there. They also have a buy on steel, 32,140 is the target on that one. We also spoke to Anil Agarwal, Chairman Vedanta, who says while the budget of course is good, but the global slowdown is an opportunity actually for India, and this is the time that we perhaps could be making a mark in the global markets as well. Listen into that slice of conversation.